Hello and welcome to Blasberg Business News. Today I'm joined by Jason Brewer, who is Chief Executive of Marula Mining. Regular viewers will know that Marula, listed in London on the Aquis market and a symbol of MARU. Jason and the team are never known for letting the grass grow under their feet. They've been busy again. Jason, welcome back on the programme. Since you were last here, you've completed several major milestones. Give us a quick overview of some of those, please.
Yeah, there's been a fair few, Tim. And look, that's what our shareholders expect from us. At the Blasberg lithium mine, we've finalised a long-term offtake agreement there. That's going very well. First sales through to Fujax being a UK-based global trading house that are activities in Southern Africa and East Africa. So strategically very important to us there. So we did the offtake announced on the lithium. We're also talking with them and a couple of other parties on our coltan, our tantalum, niobium, and feldspar production, byproduct production there at Blasberg too. And that byproduct revenue from those offtake agreements, exceeds our operating cost base 2-3 times. So very significant earnings from what is a byproduct material. So Blasberg looking very well. We're moving forward with the movement of the second XRF sorter, and there should be an update coming out on that soon. So that's Blasberg. In Tanzania, we've got the graphite, and we announced some exceptionally high grade and very broad mineralization there at both the Neori Brewer project. So fantastic results. Here in Kenya, we moved ahead with the manganese mine investment. So it's an asset which we have recently commenced the refurbishment work of the existing processing parts before we actually bring in new processing plant and mining equipment. And we're looking at basically first production over that later this quarter and first sales under a new offtake agreement there as well. So yeah, it's been a busy month or so for Marula.
Nothing new there, Jason. Let's look at some of those assets in a bit more detail. And let's start with the Larisoro manganese mine. Can you please tell the viewers why you've invested in this project and what your near-term plans are for it, exploration, development, whatever?
Sure. Look, Larisoro mine, it's 4 hours drive, 4 to 5 hours drive from Nairobi here. It was a mine that was started in production back in 2012, but it's only operated intermittently for the past 12 years or so. A lack of capital, poorly maintained equipment, very little technical expertise across both geology, mining, and processing. So there was an opportunity for us to get involved there and basically look at increasing production to an initial 5, then to 10, then to 20,000 tons a month. Very high grade manganese, near-term production, and it's a critical battery metals commodity. So it's here in Kenya as well, which really supports our strategy. Yeah, there's a few other assets which we're looking at as well to complement that. But the Larisoro mine, geologically, 9 kilometers of strike, which remains open, granted mining permits. You've already got some plants and equipment on site, not in the best of condition, as I said, but it gives us the ability to very quickly, through our investment in new mining equipment, new processing equipment, and exploration, better defining the resources, and doing some EN survey works and trenching and so on and so forth, really look at establishing a more medium scale operation there, which can produce material for the export markets. So excited is probably an understatement.
Okay, sounds good. Let's now look at Blasberg, because you've signed a long-term offtake agreement there with for the spodumene ore from Blasberg, as well as agreement for the sale of byproducts. Tell us more about those agreements and what they mean for the development of the project. Sure.
Look, the offtake agreement for Blasberg has probably taken several months longer than we anticipated. We wanted to be involved with a European-based group. I think culturally it works better for us as a group. And I've seen far too many offtake agreements done where they've fallen foul of not meeting deliveries or some other terms there. So it was important for us to be working with someone that we felt from a strategic, from a cultural point of view, just a way of doing business work. So we signed a long-term agreement with Fujax. As I said earlier, it's in UK-based. But they've got offices and representative places in South Africa, in Cape Town, and also up here in Nairobi. Literally, I can see them through the window here from my office. So, yeah, that helps when you can speak to them face to face. Free Jacks also operate port facilities here in Kenya. So from a long-term perspective, it works very well. On the lithium, we've entered into an agreement, an initial 3 years, and an option to go a further 3 years. Market price, again, benchmark pricing, fully transparent, so an open book arrangement, standard commissions and fees that you get with any trading group in the world, and first deliveries to commence in May. So in the next, we'll start delivering in May. So in 4 to 6 weeks from now. So we've got a minimum tonnage there of 50,000, which was very, to be honest, we lowballed it. There's no cap on what we deliver, but we set in minimum tonnages that we were very confident we could deliver. And again, that's from what I see in the market, of people getting caught out and not being able to deliver. And then that gives people, other parties, a chance to leverage their way into the project. We didn't want that. So the offtake there, again, is 100% of our lithium products. So the spodumene ores to start with, but we're moving ahead very quickly with the leaching facilities to produce a hydroxide or a carbonate, a much higher value product. And that's something which will come to the fore over the course of the second half of this year. So that sales of spodumene there, very significant for us, because consistent revenue to start this quarter and progress then under these offtake arrangements for the next 6 years approximately. In parallel with that, we've been negotiating the sale of what we call byproducts. And that's where you've got the coltan, very high-grade mineralization. And remember, Blasberg used to be the largest producer of tantalum in South Africa. So a proven seller of this material. So we've got agreements which we're finalizing now for the sale of that product. And also for the feldspar, which again is another very high-value product. The feldspar is going for about $500 a ton. The coltan, the tantalum, is going for about $100,000 a ton. So very quickly, when you look at our cost base, these byproduct credits will actually, when you combine them, will dwarf spodumene revenue based upon the current spodumene prices. So you'll be in a very good position there of being a very low cost producer and basically selling the majority of what you're mining. And you can do that because of the XRF sorters, our processing equipment, which effectively separates the coarse, the feldspar, the tantalum, the spodumene. So it's a very effective way that we've got there in terms of our operating procedures.
Okay, so powering ahead, Larissora with the manganese, Blasberg with all of these products moving into sales. Finally, let's have a quick look at the graphite projects, the Neori. We've got some very high grade graphite mineralization. So what does that mean for Neori? What does it mean for the next phase of exploration? What does that look like?
Yeah, look, Neori, I was there over a year ago, Tim, and I saw it. And I actually had a Marula shareholder with me at the time. He was actually on holiday because Neori is very close. You can see Kilimanjaro in the distance. So we had a Marula shareholder there who actually came on the site visit with me. So we got there and both of us saw this graphite mineralization. And it was one of those wow moments. And I'm not a geologist, so I don't get too excited over rocks. But, when you saw that mineralization there, which is exposed in a small open pit, I was like, okay, this looks like something special. We've then completed this first phase, mapping and sampling work. And over a 3-kilometer area, they focused on about 1.2 k's of this. Strike, which is open, up to 150 meters wide. And where you're getting, I think the average grade across the whole thing came to almost 9% sort of graphitic content. It went much higher, up to, I think the highest one was 15.89. But the exciting thing was when you did the sampling across the width of this mineralization, very consistent, very high grade material. And at surface, this was the other thing. This wasn't through trenching, this was at surface. So, this work and the assay results we released just last week really confirmed that we've got something, in my mind, very special. What it also confirmed is that our strategy over the past 12 months has been to consolidate our position here on these around those licenses. 12 months ago, we had 10 licenses, 10 granted mining licenses. I think we've now got 27 granted mining licenses, 8 more in application, and another prospecting license over a much bigger area as well in application. So we've increased our strategic landholding several-fold over the past 12 months. And these results really confirm that we did the right thing there, because you know what? It's become a very busy place since. And I'm going to put up something on social media later today, which shows something like 50 new license applications in and around our ground in the past month. Now that says something. I mean, I don't have to be.
Says you're in the right location, doesn't it?
Yeah, and look, it's all about that. It's in the right location. We've got great infrastructure. What does it mean for our shareholders? It means, and this is what our consultants, independent geological consultants, have said. They said there's a mine here. This is with the potential to host a medium scale mine, and that's what we're going to be pushing ahead on over the rest of 2024.
Okay, you've ticked off a whole lot of milestones, Jason, that you and the team in this first quarter. What can you possibly hope to achieve? What's left for the second quarter? Go on, loads, I'm sure, but what should we be looking at?
Look, this quarter for us, so ending the first half of the year, it's about delivering on the cash flow out of Blasberg, getting those first offtake sales through. And I think that if there's one thing we've got to tick, it's that box. Okay, so that'll go through. The second one is ticking the box there at at Blasberg. Sorry, we've got new equipment coming in, another XRF sorter, the Cholera unit, which comes in. That increases throughput capacity, processing capacity, portfolio. So you're really stepping up a gear there. But the box is to tick this quarter for Blasberg. It's revenue. It's simple as that. And we'll have revenue both on the lithium side and on the byproduct side. So we're finalizing the sale of the 2-ton, call it initial sample of the coltan. And 2-ton may not sound much, but that's anywhere from $200,000 to $250,000. So yeah, not bad for a little junior company there just to do it. And we've got several other tons of that already bagged and ready to go. So yeah, we'll move very quickly on that. Selling the feldspar as well. It's revenue generation. At the manganese, again, we'll deliver a few things this quarter. Production, cash flow. Yeah, we'll sign an offtake agreement for that. We'll deliver to some of the existing clients that they've got there. We'll have first products going out there in May, first sales in May, and you'll continue to get production increasing as we've got the new equipment and the refurbished plant this month. That month. Canusi, the copper, which I haven't talked about yet, Tim.
No.
Yeah, another opportunity for us. The idea is to progress that into production this quarter. Okay, we've had a lot of work done moving away from the initial concept of a DSO copper to more of a copper cement. So instead of getting in aggregate about 20% of the LME price for each ton of metal, we're now moving up to 80-90%. So from a return perspective, 4 to 4.5 times increase in return. So very important for us. There's a few new project acquisitions which are going to come into the mix as well, Tim, just to keep everybody on their toes. Some more tantalum and tungsten down there in South Africa next to Blasberg. Tungsten, as you know, I think there's some quite darling companies in the market in London that have got tungsten. I think that's ready to be processed through our facilities at Blasberg. So that's very, very positive for us. The manganese here, you'll see some other growth here. And another one which will add just to give us almost the full house of critical metals, battery metals, is cobalt. But not in the DRC, not in Central Africa. Cobalt in Southern Africa, high grade, brownfield operation, and one where we feel we can get into production relatively quickly. So yeah, a lot happening on the project side. And then we've got the new listings, Tim. The new listings here in Nairobi, the new listings in South Africa, and the move to the main board in London. So corporate-wise, I think that's what everybody's looking at as well for in London, is the move from Aquis. And Aquis has been a great market for us, don't get me wrong. But, I think us moving to the main board and the dual listings here in Nairobi as the first ever mining company listed on the exchange, and into South Africa as well, will really assist us as we grow this business.
Jason, thanks for joining us. Come back and keep us informed. And I'm here for another busy quarter, I'm sure. That was Jason Brewer, Chief Executive of Marula Mining, giving us a very good update on what's happened in the first quarter and also giving us a sense of the excitement to come in the next quarter. That's it for this edition of Blythe Business News. Thanks for watching.